Good afternoon, everyone. I believe we're live now, and this is the first Save Canadian Mining podcast in a few months, and it's an important one. We wanted to bring you up to date with some developments that are happening in the field, and we think they're relevant and would be of interest to our audience. Today, we're blessed to have on our podcast probably I would consider the foremost legal expert on short selling and the legal and framework in Canada. That's Paul Davis from McMillan Lynch. And I made some notes because I needed to make some notes because Paul's got quite a resume here. I'll just be brief, but he's a partner at Capital Markets and Securities, specialist in M&A, and he's the chair of the board of partners. And so we're very lucky to have Paul today. And if we could advance that slide, maybe one right here. Yeah. Oh, back. Yeah. So McMillan Lynch did a very important study on the short selling environment in Canada. I think it was released in October of 2019, just when Save Canadian Mining was getting going. So they were like, the canary really about this issue and thought leader and still are. And so that's an important document and very. And I think what we'll do for our readership is I'll give you the link in an email, and it's obviously not a small document, but it's got a lot of great information, and it's sort of really sort of insightful to have it all in one spot. And we're fortunate to have Paul here today, and Paul will guide us through some of his thoughts on it, and McMillan Lynch's thoughts on the matter. And then we'll have some questions and stuff on the most recent IIROC announcement that, in mid-August, that they basically gave a directive, discussing the predatory short issue and indicating that, they call it naked selling, naked short selling, and defined it a bit and said it's illegal and up for the investment banks to sort of police it. That, in my view, they put the ball clearly on the investment bank liability wise. So we'll get into that in a second. But before we do, since this is our first time together in some time, I'm going to do a quick, sort of rundown of Save Canadian Mining, why we came into existence, and the cause we're fighting for. And I'll just run you through a couple of quick slides. So this is what we call the money slide from my perspective. We did a study. Murenbielt is a very respected research outfit here in Toronto. We do a lot of work in the gold and silver space and the resource space. So I commissioned them for Save Canadian Mining to do a study to try and get an understanding of the impact of what we think predatory short selling is causing in the markets. And while no study is completely 100% proving any point, this one does, I think, go a long ways to sort of proving the direction of where we're at here. And that slide in particular is a great one. It basically it shows that before the tick test, which was when we started Save Canadian Mining, was the number one issue for us. Since then, we've developed some other ways to skin the cat here. But in October 2012, the governments around the world sort of changed what had been a policy of exchanges around the world, that if you wanted to short a stock up until that point, the stock had to be going up, which makes sense if you think about it. And the exchanges were invented to allow companies to access more pools of capital and to allow investors to access more pools of opportunity. So predatory short selling is, in our view, the definition is when you sell a stock and you don't own the stock and have no rights to acquire the stock to contractually or through options or whatever, and still sell the stock, and then you don't declare it. And so that's what we call predatory short selling. We're not against short selling. People think Save Canadian Mining is against short selling. We're not. We think short selling is another side of the coin, and it's important for capital market functioning. But predatory short selling, when you sell a stock short and you don't have the stock to deliver in T plus 2 days, then that's predatory, and that's what we see. So the study we did on this slide, what it showed was that basically it looked at the markets, and the markets basically in mining, even though the predatory short selling is a problem across the board, not just in mining, but obviously we're a miner, so we focused on mining. we looked at the TSXV Metals and Mining Index, and at a combination of the basically the precious and base metals commodity indexes. And before the tick test came in 2012, those indexes basically, we traded at or slightly above the commodity price indexes, which makes sense because mining is a commodity business. Since then, we've gotten all the way down to we're trading at about 35%. We're going to be updating this study. It's about a year and a half old now. So, but we believe them to be relatively similarly priced right now, but we'll get that out in probably another 2 months. But that's a significant loss of value. What does that mean? So we tried to do a little bit of calculating on that, and basically, almost $25 billion worth of market value in the market cap. And if you sort of look and say, okay, what does that mean in terms of the loss? It means it could have cost us over $40 billion in market cap, and that basically means that the companies aren't able to raise the capital that they would have otherwise raised. They aren't able to employ the workers. They're not able to pay taxes, and there's obviously a loss of investment return. So it's a significant sum. This is not a small number. In the job side of things, a lot of people don't recognize this, but probably about 10% of the workforce is indigenous. And if we're looking to certainly help our indigenous cultures in this country, one of the best ways we can do it is to promote mining. So they're getting disproportionately hurt by this. What does the research say? Summary-wise, we basically, when we looked at it, we said the tick test has been removed. Stock prices are now about 2.5 times lower than historically. It's not linked to decline in commodities, and since they removed, the number of issues has declined dramatically, and the equity capital has been reduced, and there's been about a 62% drop in local spending. So obviously, pretty serious issues. These are slides that just back that up, and we'll post it in the slide. We're starting to get some recognition, or we started really getting recognition in the U.S. with the Wall Street bets and the GameStop and AMC and that sort of thing. And predatory short sellers started to get caught. They've been caught in the U.S. for some time. That's an ongoing situation. It's getting better in the U.S. With the we understand there's some pretty serious heavy lifting going on in the DOJ now, Department of Justice. And we're expecting some indictments to come down on a number of the short selling cases. What is Canada doing? Well, we've got this IIROC announcement, but that's not protein, despite popular knowledge. The crickets, a little shot there, but crickets there's not a lot going on here, and we need to get something more going on. And I think that's probably a good segue to just get back to the question here of what IIROC said. So I'm going to switch it over to Paul now, because Paul, he's much more detail oriented, as a lawyer should be, and what IIROC said and they didn't say. So I'm going to ask Paul, what IIROC came out with an announcement in mid-August. What did it say to you?
Thanks, Terry. Maybe it'd be good to do a little background to give the context for IIROC. So under our securities legislation, right, you have to, if you do a short sale, you have to tell your broker it's a short sale. And both our securities legislation and IIROC rules really impact investment dealers that are members of IIROC. Both prevent manipulative and deceptive trading, right? And part of the IIROC policies says that, before making an order, a sale order, that's a short, you have to have a reasonable expectation of settling the trade, right? Otherwise, that's manipulative and deceptive trading. And the old rule, the question was, what does reasonable expectation meant? So IIROC interpreted that to mean that it requires you that you couldn't make a sale knowing that the securities cannot be borrowed, right? And when we wrote our paper in October 2019, that's one of the things we found truly problematic, because we made the bold statement that that's really nothing more than saying illegal short selling is fine, right? Because that sort of lax rule doesn't really come close to rules in the US or Europe and Australia. And we did a comparison, which is actually cited in the Modernization
Yes.
Task Force report.
Yeah.
And so we said that's what's one of the first rules that have to change. And the studies that IIROC had done, we thought had to be redone because they really didn't address the real problems and that this created systemic risk. So the Modernization Task Force followed up on that, and they recommended that that rule be changed, which is part of the Universal Market Integrity Rules of IIROC. And they said switch it to either one of three things: either confirm that the security has been borrowed, which is more like Australia, like a hard borrow rule. Second, confirm that a bona fide arrangement has been made to borrow the security, which is more like the US, the locate rule. And the third, the lowest threshold, was confirm that there are reasonable grounds to believe that the security can be borrowed so that it can be delivered on the settlement date. And that's what IIROC recently adopted, that third rule, right? But it's a policy interpretation of their existing rules. And they picked the lowest threshold, which I think is a clear improvement from the current rules, although it's still not clear what it means, although they've given some guidance. But it's not a hard kind of locate rule, but it's certainly better than what we have before. And so I think that's a step forward. But if you look at the proposals which are in our long report, and even in the Modernization Task Force, we still think there's a long way to go in order to make our rules as stringent as even the US rules. And as you and others may know, in the US, there's still significant short selling problems, but their rules are far more stringent than ours.
Yeah.
Still, even with this change.
Yeah, no, I agree, and so I think that's sort of what was interesting to me when they put that out. It was not startling because I mean they just clarified that in fact was the rule, and I've talked to some of the securities exchange people provincially, and they said they thought that was self-evident that was the rule, and they were surprised at the sort of the Twitterverse reaction to it. And but I felt the one thing it did is I think it sort of transferred the liability over to the investment banks, so that if they actually don't follow through, and if you do actually bring evidence to them and they don't follow through, then it's clearly on them. So I thought that was important.
Well, sorry to interrupt though, but it actually, that obligation has always been, remember, IIROC only has regulatory oversight over its members, which are the registered investment dealers. So it rules only related to investment dealers to begin with. So the tightening of its rules impacted them. Other people are impacted by securities legislation, which is pretty broad. But obviously, and I say obviously, but from a securities lawyer perspective, it's really the registered dealers who have the real impact on this market, on the short selling market. And so they've just tightened the rules for the people who they have regulatory authority over, but the rules existed before. They were just so lax. And we always point to this point, right? If you think about how many short selling enforcement actions have there been in Canada, and I think we counted 0 in 2019, that tells you how helpful the old rules were. And the question now is, do these new rules provide sufficient teeth to deal with naked short selling in its truest sense, or what you call predatory short selling? We'll see. I'm just not certain it's enough.
Yeah, well, no argument here in that it's not enough. I mean, we think they need to go farther, both on this rule and in just general transparency. It's the fact that we don't know, for example, every day how many failed trades there are. That's not a statistical piece of evidence. It's criminal. In my mind, the IIROC has got this information, and they have an ability to display this information so that we could actually look at it over the course of time. so we know when this thing is abnormal versus normal. And so there's a lot of information that could be given to market participants, investors, and companies that are looking at raising money that could help everyone make a much better decision. But that's not out there, and so there's a that would be very helpful. But I mean, you got to sort of, I guess, from my perspective, think, okay, you got to start somewhere, and at least this is something. Now, I sort of took it as, as a company that's been, plagued by these guys. I say it as, okay, so now if I can bring hard evidence to investment dealers that says, guys, here's documented proof that predatory short selling is taking place in my security. Here's where it's taking place, and you need to close these positions. If they don't, well, then I fully expect IIROC to deal with them, and we'll see.
Well, so the one thing I should have said at the very beginning, which we do say in our paper, these are reflective of sort of my personal views, right? They're not my firm's views, notwithstanding I'm chair of the board of partners, and they're certainly not our clients' views. They're my personal views. That's in our paper, we focus on proposed changes we thought would be critical in dealing with systemic risk, which I personally think is a real issue we're focused on, right? And so, do these rules empower individuals or issuers to then complain to investment dealers, and that will cause them to change behavior? I'm not certain they do. What we have talked about in our paper are sort of two other key issues, including a stronger sort of locate before you enter into a short sale. One you talked about, which is transparency. And the securities regulatory authorities have, at least Ontario, have daily reports on failed trades from CDS, right? The exchanges have data. And in the US, you can get data on failed trades, on short sales. And from our perspective, it just seems strange that you have to wait twice a month for short sale data and you can't get it daily because the information's available. And there've been lots of reasons given as to why we can't have it daily. It's just not clear to me why that can't be available. The second issue is really, I think, one of the big issues is a compulsory buy-in, right? That's sort of a more ironclad way to address any concerns about naked or improper short selling. And we certainly have systems in place to do it, and other jurisdictions have it. So it doesn't strike us as a big step, and the Modernization Task Force made a recommendation regarding the buy-in. And I'm not going to get excited about the time periods, provided it's reasonable. But I think those two issues in terms of full transparency and buy-ins would allay a lot of concerns and would also provide people with information to better understand the short selling activity. And again, we've said this publicly, privately. We think short selling is critically important to the Canadian market. It's a question of liquidity. It's also just on price discovery, unearthing problems. But the market really we don't think, survive without it in terms of the liquidity for particularly such a small market. And so we think it's very important. But the more important it is, the more we would think you would want transparency to make certain people can actually see what's going on.
Yeah, I think that's a good point. I mean, a couple of things that I found in conversations with IIROC. One, the short selling they report twice a month, that's not really an accurate number. That's the number of honest people that have said, I'm not shorting, or I am shorting and I'm shorting, Power Nickel or whatever mining company or software company, whatever they want to do. That's fine. Those are, as you say, important participants in the capital market environment, and that's quite legal, and we have no problem with that at Save Canadian Mining. The problem is the guys that don't report their short selling, okay? And IIROC either doesn't capture it or doesn't choose to capture it. I'm not sure which, Okay, because we had eventually when we made our presentation to the task force in Ontario on the modernization of the capital markets here, we were interacting with IIROC to get data to sort of, and it was a struggle to get this data. Eventually, we got the data, and despite their assurances that short selling wasn't a problem, their data actually showed it was, and we made this part of our submission, under basically secrecy until the submissions become public, because that was the way the data was given to us. But I mean, even within their, in my mind, their poorly constructed capture of short selling data, it showed short selling was a problem and causing a problem in small market cap stocks. But it doesn't seem to capture what happens when, just to refresh, for the consumer's memory, is that when you buy or sell a stock, you're supposed to pay your money in 2 days or deliver the stock in 2 days. It's called T+2. Okay. When you don't do it in T+2, in Canada, it doesn't become a failed trade until 10 days later. T+2 plus 10. Okay. Most of insane, failed trade policies in the free world that I'm aware of. Europe is T+2 plus 4. I think the US is similar. So obviously we got to change that. And that was one of the, recommendations from the task force, was to go to a more European style thing with a T+2 plus 4, where it becomes a failed trade. But what we believe happens in the industry, what we see happening on the market is right now, what before the 10th day comes, these guys roll the trade over. They sell it again. They cover their first trade, and then it starts it again. And it's like if everyone remembers the movie Catch Me If You Can with Leonardo DiCaprio, where he was writing checks, and it took 2 weeks or 3 weeks at the time for the technology to capture that he had a bad check. Well, it's like that right now in the stock market, I believe, where people are basically, they're never actually delivering the stock. They keep forward selling, and like GameStop and AMC are, much higher profile evidences of this in the United States. And this is, basically what
the one thing I know, I mean, what you're talking about is actually worse than you have articulated, because when you talk about in Europe a T+6 or in the US a T+3, a T+5, that then requires you to buy in. In Canada, the T+12, the 2 plus 10, only requires you to file a report. There's no compulsory buy-in that goes with it. So it's actually, even I don't know about, and I would never comment on things like rolling over, whatever, but even without that, you still don't have the legal protections that you have in Europe and in the US to deal with a reported failed trade. So it's actually a lot simpler here.
Yeah. I mean, when we looked at the buy-ins, we had the conversation. It was actually, I was with Eric Sprott, and one of his staff members had been a CFO at a dealer, and he said actually the way they had understood it, the laws on the dealer level at the time, was that you only had to buy in if it was within 10%. If it was more than 10%, you weren't compelled to buy in. There was no, and I don't know if that's true or not, but that's what we had been given to understand. And clearly, if your point is well made, is that if you're not forced to buy in at some point and forced to buy in at market, then what is the disincentive? So what we're trying to do, or what the market should be trying to do with this type of behavior, is to basically, people that do behave illegally and get caught, they should be, and the market goes against them, they should be forced to buy in at the highest possible price and suffer the biggest loss. So because these guys, these are like the predatory shorts, the people that are, in my mind, in the minds of many mining executives, in many minds of many public company executives in this country, that are manipulating our markets, these are amongst the smartest guys on the planet, because they're making tons of money and they can hire the brightest guys. So these are very smart people. Make no mistake. So and they're it's when you see these settlements in the U.S. and I've had Wes Christian on, who's probably the most famous short litigator in the United States, and he's settled, I think, 10 or 11 cases between plus 10 figures with the giants of the industry, the Goldmans and J.P. Morgans and etc. All that he can't really talk about other than he got a settlement. But these settlements, which sound like huge, in 10, 20, 30 million, some number like that, it sounds like, hey, that'd be a big number. But these are on settlements where there's $25 billion worth of trades. I mean, it's staggering. So this is just a cost of doing business. So the system is really sort of wonky, and it's sort of scary in a way, in terms of dealing with the integrity of the entire market, which is where we're at. And like when we approached it, we said, hey, look, we can't be all things to all people. We can't fix everything. So when we started Save Canadian Mining, our focus was on mining caps or market caps of less than 250 million, and I think that's still principally not a bad spot to start, just to show, hey, let's look at this micro market and try and fix that. Okay, so it at least is more efficient, fairer for the investor, and for the companies. And if it works there, then maybe we move it up the ladder. But because overall wise, it's not a massive number. I mean, and people say, I can't believe they're shorting $20 million stocks. Well, yeah, they are. There's just no question about it. But and the government, and this is why we've been lobbying the Ford government in Ontario, because we felt that we're a volunteer group and didn't have the horses to lobby entire Canadian provincial securities network. So we focused on Ontario because we were here. And the Ford government, to their credit, has been open-minded and listening to it, and I had the task force, and I think came back with some good recommendations in the task force, but they need to be put in place, and they need to instruct their securities exchange, the OSC, to impose it on IIROC and make sure IIROC plays ball.
I mean, the good thing though is that, and I don't think it's been widely reported, but there's lots of commentary coming from the Canadian Securities Administrators, and whether through the Modernization Task Force or other avenues, I've no doubt that they're looking at this issue pretty thoroughly. So we'll see what, if anything, they do to address this issue. But I think the first issue, though, is transparency, because you need to understand the problem, right? Because I know people have these views about how big or how small it is or how insignificant it is. And until you have the data, I think it's hard. It's all conjecture, and we need to get beyond conjecture to understand the real problem. My only sort of non-scientific analysis is that if you have no enforcement action for short selling in this country with our rules, which are more lax than Europe, the US, or Australia, then that's got to be a problem, right? It's just got to be a problem. And it may be circular in a sense that the more lax the rules are, the more the least there's not that much to enforce anyway. So that may present its own problems.
Yeah.
But I think that's from our own analysis, one of the concerns. Our market just can't be that different than other markets in the world, because I can't imagine we're less sophisticated, and where you have a market, people will find ways to make money the right way or the wrong way. And so we need rules. And again, our focus has just been on systemic risk. We're not regulatory happy. We just want regulations for the sake of regulations, but having minimum rules that address systemic risk.
Yeah, I think that would be phenomenal if we could get there. And I think the only way we're going to get there is through political pressure and through politicians realizing that this is causing significant job loss across the board in key industries that employ a lot of high-paying jobs, and disproportionately a lot of high-paying jobs in key minority sectors like the Aboriginal community, that, doesn't get a lot of great jobs, but this is one of the areas that they're very competent in and can earn and have high paying jobs and do phenomenal on. But that's being crushed because the markets, despite the a bit of obviously a commodity upswing here lately, especially in the battery metals, still hasn't translated into enormous financings or very vibrant capital markets for mining, and people wonder why. And when we did some interviews with Eric Sprott, who has been a benefactor of this organization from the start, and Eric, not to quote him, but to paraphrase him, he said, investors aren't stupid. He says they eventually figure out it's a rigged game and they just opt out. And I mean, I'd hate to think of where the precious metals market would be if Eric Sprott wasn't an investor, because he basically carried it the last number of years. And today, when now you would think with the shaky economy, inflation, etc., generally speaking, broadly, great conditions for precious metals, hasn't been a major rebound, and the reason why is there's not a ton of investor interest, because people haven't had any big wins. They've been generally losers, so, and investors, as Eric said, they're not stupid. They eventually figure out, hey, the game's rigged, I'm not going to play there. And that's really sad. That's why, honestly, I was going to, when I started Save Canadian Mining, I was all set to leave mining. Honestly, it was a small section of my portfolio. I've been in it for a long time. I just to help a friend of a situation. I put friends and family money in. I was frustrated. And I remember we were at PDAC and there was nobody coming. It was early on Sunday. I was talking with my booth mates, and I said, God, I know it's bad, but I didn't realize it was this bad. And they said, yeah. He said, well, PDAC, they just decided they're charging $20 a head to get in. I was like, I lost my mind. I said, you mean you're charging? It had always been free. And anyway, it made me realize that, wow, again, they weren't dealing with this issue, PDAC, which they should have. But, and I thought to myself, wow, before I go, I should try and bring this to the front of people's attentions and try and make a difference, because it's so sad. Canada, it used to be the leader in mining finance and advancement. Australians are really coming on strong now. I think they've stolen a lot of our thunder, and they'll continue to do so if we don't make some changes. Like, we don't come up with better ways to protect our capital markets, to allow new companies, because in capitalism, all you want is good companies to get rewarded with capital and better prices, and bad companies to ultimately have stocks go down and ultimately, change their business or get new management, whatever. But what happens unfortunately, when you got markets that are trading literally at a third of their historic values, the distortion is across the board. Good and bad are washed down. It's very hard for people to see. And the scary part with the predatory short action, and you see it, like, if you talk to companies, it's not just them selling shares they don't own. It's the spoofing and all these other things that come as part of the package. And it really makes it tough on these mining companies that really should be blossoming right now, especially we're both in this, probably the greatest commodity bull market in our lifetime, and people should be getting to the long side of this thing. And I believe they would if they could actually see that, hey, our investments are going to get protected, and that's the scary part.
I mean, you mentioned an interesting thing about Australia, because in Australia, naked short selling is not even possible, right? They don't even have a locate rule. You really have to have the unconditional right to have that stock. So it's not even possible to do naked short selling or predator short selling. So it's interesting that you mentioned the difference between Australia and here in terms of the markets. And obviously, again, it's more conjecture. I don't know whether one is related to the other in terms of the protection of small cap mining companies or not.
Yeah, but I know from talking, like, if you look at valuations relatively across, like, I've looked at like a nickel, because I'm in nickel and copper and lithium, and it seems to me like these guys have better valuations than the Canadian counterparts, on a sort of price per unit of commodity in the ground, which is like, just one way to look at it, but it's a fairly standard way. And so obviously, if that stays for a long period of time, then why wouldn't you list in Australia and do your business there? And then it's just so counterproductive. So this is the reason why the IIROCs of the world need to, I think, be more assertive, and why the securities exchanges, and hopefully you're telling me that the Canadian Securities group,
administrator,
administrators, which is all the security exchanges where they come together as a group, it's got some deliberations going on. Hopefully they come back with some more teeth and some policies that will help to protect this market, so that we can get back to being good companies or bad companies based upon our drill results, which is really what we all want. Nobody's asking for anybody to reward bad companies with good stock values.
Yeah. And I think it's important. I mean, the one thing though I would note, which I know is sort of blasphemy on this podcast, but we didn't argue for the return of the tick test, because even the U.S., they only have it really as a circuit breaker mechanism if stocks crash. In the other jurisdictions, they don't have it. And even though we have some concerns about IIROC study that they did to get rid of it, we're not certain it's the best way to study it. Just when you look at the other jurisdictions, they've sought to address the problems through transparency, compulsory buy-ins, and ensuring that people actually borrow stock, right? And I think if we can deal with those issues, and also there are issues about, do you have more enforcement rights and legal rights shareholders do or issuers do for illegal short selling, so that they themselves can bring actions, civil actions. That's something else we do explore a lot in the paper. But I think if we could address those other issues, I don't think the tick test would be as important, because a lot of people have concerns about whether the tick test is too negative a consequence on short selling, when you look at shorts versus long. But we didn't really spend a lot of time talking about it, because we thought it'd be simpler to address the real concern by attacking it from the three areas that we focused on. Again, looking at doing our comparative study, looking at the US, Europe, and Australia, and the impact short selling has there.
Yeah, when I started, we were very obviously campaigning for a restoration of the tick test, as we saw it as a eminently practical way to go forward. As we went through the process, a couple of things were observed, and at the end of the day, all we're trying to do is create a more vibrant capital market, and a more efficient capital market, and a more transparent capital market. And we're not really fixated on any one solution. We're fixated on that objective of having a more transparent market that's fair to the participants. That being said, it's incongruent for me as an individual investor, and most individual investors I talk to, when they buy a stock, they'll look at the TSX feed price and the trading, and they'll say, they'll think that's the market. Well, that may be 35 or 40 or 50% of the market. The rest of the market's on these other exchanges, and there are all sorts of different price discovery techniques. And to me, it makes no sense that we should have multiple markets in a country on a stock. It's like, or if we do, everyone should have access to all those markets, but they don't. What we're saying is, if you're a rich hedge fund, you have access to double the markets that an ordinary investor does. How is that possible in capitalism? That's just not, it shouldn't be possible. I mean, it's just inherently unfair, and it creates distortions. And these guys drive trucks through it and have made billions doing it. And to me, that's just nonsense. The tick test would act to sort of police that, in my mind. But I agree with you. At the end of the day, we're not really trying to pick the one thing that solves everything. We're just trying to create a more vibrant capital market, a fairer capital market, and let's get there as quickly as we possibly can. And on the tick test where we're at now, we're saying, hey, it's high time we had a review of this, because that was put in very quickly without thorough, proper review. Certainly no companies had no clue as to what was going on. I remember speaking out against it back in the day, and I was stunned they were doing it, because I've raised money for companies all my life, and that was I think an important mechanism. That's why they put it in there. But I think we should have a review in the full light of day with transparency, with real numbers, and let's see. But we're not fussed on any particular rule other than getting it right and making it fairer for companies and making it much fairer for investors. But Paul, listen, while we're chatting, I'm seeing lots of questions coming up.
Okay.
And I think, Cam, maybe we'll bring you in here now, and maybe let's go to the audience and see what their mindset is on the issue. Maybe there's some questions we could answer with Paul's help, and speak to some of the questions that are out there in the community.
Oh, absolutely, Terry. And to the audience, I'd like to remind you that if you do have any questions, we're going to try and get through as many as we can with the time remaining. But you can ask them using the Q&A chat on the right-hand side of your screen. First question from Danny. Would it not make sense to regulate the settlement system? If you can't settle on a T+2, then a buy-in should be automatic after a certain grace period, much like they wanted to do in Europe. Thoughts, guys?
Well, I think what we have talked about and what's in the modernization task force is to have an automatic buy-in. I think there'll always have to be exceptions, as there are exceptions now, even in terms of how the short selling rules apply, whether it's a market maker difference, etc. But other jurisdictions have an automatic buy-in subject to exceptions in Europe and the US. Funny enough, Australia doesn't have it because they don't need it because of the certainty you must have to have the stock. So failed trades are incredibly rare. But no, I think it makes sense to deal with that on the settlement side because it will solve a lot of the risk.
Yeah, I think that makes sense, and the more I hear about the Aussie system of not letting it happen in the first place, more of an advocate I am for that, because the one thing I found with as I've gotten deeper into this issue is there's the nuances that these people that are the guys that are the people doing the predatory short selling, they have figured out 1,000 ways to fudge the system, and they will in the next set of rules they'll figure that out too. So I think the Aussies, to their credit, have said no, we're just going to make it impossible to do, and that sounds good to me, but that's just me.
Fair enough. Another question: why do you suppose IIROC takes such a lax approach, and have they ever provided an explanation?
IIROC would tell you that they're not taking a lax approach. They would give you their we're fully on board in protecting your interests. The reality is, that they I don't know if they either don't appreciate the nature of the problem, or they don't want to appreciate it, which is sort of blasphemy for me to say. But I mean, it's questionable. I mean, honestly, they at times you wonder what's it going to take to get these guys lit up. I mean, I do commend them for making that clarification, and I did post that public. I praise them because I think that's, hey, maybe they're starting to wake up, and God bless. They're the enforcement in the country today, and so it's up for them. And if they would step forward and provide some leadership, then we'd be all for it.
IIROC has publicly said that the rules it's put in place address the Canadian system, which is dramatically different than the US, because in their studies of failed trades, our failed trades are dramatically lower than the US. I think, we spent a lot of time in our paper discussing kindly the problems with IIROC studies. I mean, they are, from our perspective, deeply flawed. But our other point is, even if that's true, it seems a strange thing to say that when you studied this, how many years ago, for whatever 25 days, is that an indication of dealing with systemic risk because failed trades were low for a limited period of time? It just doesn't seem to make sense to us. But that is and has always been their rationale for having more lax rules, because there's no problem here.
Yeah, and that's just it's the chicken and little theory. The sky is falling. I mean, it to me, and having gone through the frustration of dealing with them to get the data to talk to the task force, I know that what they say and what the data says is two different things, and I really believe that the way they construct the data isn't well done in terms of what is a failed trade. Well, I mean, failed trade to me is if you buy a stock and 2 days later you don't settle, that starts to tick on the failed trade. And as you say, whether it's 4 days or 6 days or whatever, some fairly narrow period of time. And at that point, when it's done, that's a failed trade. And unless there's some major exception, that some sort of systematic risk thing that comes into order, that should be public information on that. There should be we should understand, is this an unusual number of failed trades, or is this a regular number of failed trades, etc. And we're not getting that data, and there's no reason why we shouldn't get that data. The data exists. Why would you not give us that data? To tell us to trust us, that we don't see it as a problem. We can clearly see it's a problem, and it doesn't make us trust you when you don't speak to it. So that's the problem, and it really is disappointing, to see that they still haven't woken up.
Speaking of publicly available information, Craig wants to know what's the best publicly available source of open short positions on a TSXV or CSE stock.
Well, you see the reports, the IIROC TSX reports. That's it. I mean, if it's interlisted or over the counter, you can get information from FINRA. You can get information on U.S. exchanges. Sometimes you have to pay for it, but some of that's even daily. But if it's a pure Canadian play, it's pretty. I mean, I know there are ways people sort of back-end stats and data from trading and shares outstanding and floats, but that's not from a lawyer's perspective what I would call clinical data I can go to the bank on. So in Canada, it's very difficult.
And we looked at it a lot. The data, you just can't get it here. You get this short report, which is I said from sometimes back in the conversation, that this is that's the actually honest shorters, and we got no problem with those guys. They've actually declared it, and they're the other side of the bet, and that's fair part of capitalism. It's not those people that we have an issue with. It's the people that are not declared shorts that are fundamentally short, and there's a lot of them. And it's interesting, in the U.S., theoretically, FINRA provides that data. Very hard to get that data that's accurate, because when you get in and you start to search, you realize that the way they construct their data is very tough. There's actually a group that we found through the pathway here called buy-ins.net, and they've been scraping the data from FINRA for 20 plus years, and I consider them to be the best source of short data in the United States on particular issues. And they have they obviously don't have a number on Canada because they can't get that number here, but they gather the information every day, and their view is that if you haven't gathered the information every day, you don't really get a thorough look of what the true short position is in the United States. That's their perspective. I believe it to be true, and they've come up with some numbers on based on historic proxy battles and different things to interpolate U.S. like interlisted Canadian stocks with U.S. stocks, and say if there's this many short in the U.S. on this level of trading, they suggest here's the number in Canada. Now, again, this is because there's no hard evidence. It's hard to really say on this, but it does provide a guidance number, and we've used that, and we think they're more accurate than not. Okay,
fair enough. Pete wants to know if you're coordinating or sharing information with West Christian and Naked Truth.
No, we're not coordinating with West Christian. We're certainly cooperating with West Christian, and we think he's doing God's work down there, and happy to help in any way we can. But we're not. We're a very small organization, Save Canadian Mining. Obviously we share our research with them. When we have our updated research, we'll share that. But we're a very small research-driven organization, I would say.
Gary Clark has asked, has anyone tested the rule? Which I hope has enough context behind it that you can answer.
You mean the new rule?
Presumably, Gary, if you have any context, you can type that in the chat.
Yeah, presumably. It's a new rule, but it's fairly new, and it'd be hard to understand how you test it, right? Because IIROC regulating its own members, we were registered investment dealers, and so I mean, only IIROC can answer that question.
We're readying a test at Power Nickel. We've been gathering a bunch of evidence, which we hope to have probably maybe we're 30 days out, and then we'll be presenting evidence to the investment banks where we see a compliance issue, and then we'll expect the investment banks to do the right thing and address the issue and close the trades. If they don't, then we're going to publish it so the world knows what's going on, and B, we'll be obviously forwarding it to IIROC and hope that they will regulate these people. But obviously, from a public company standpoint, we're not looking to fight with any investment banks. God, you're a public company. You want your investment banks to be your friends. They're the access point to investors. So we want them very much to go from the short side to the long side on these deals. And but we're going to do this. We've seen it done once before, and it's got some new tactics. We'll see if it works. If it does, that will be shared within the Save Canadian Mining Network to our fellow companies there, and to help assist them in their own particular courses of action. And maybe that'll start a trend, we hope.
Okay, fair enough. Christian has a question. I'm going to try and distill it as much as possible. But it seems to him that banks and brokers are letting shares be borrowed without being located to boot with. And it seems that there are these loopholes that are programmed almost like a feature. If healthcare equipment have critical ISO standards, how are banks and brokers having access to create synthetic shares from the market makers to boot with?
There's a lot in that one.
There's a lot in that one, and there are some underlying assumptions which I won't touch. I mean, the rules are the rules. We have spent a lot of time and paper talking about the problems with our system compared to others. This one change doesn't solve the fundamental problems with our system. It's certainly a step forward, but it doesn't solve the fundamental problems with our system. And I guess from my perspective, that's where I would leave it. Others may go further, but that's where I would leave it.
Yeah, I mean, again, we have to, bureaucracies like IIROC move slowly, okay, and they probably have to for lots of reasons, that are frustrating to, companies and individuals, but obviously they're administering a lot, and so I give them some, some sort of coverage or some sort of, pass for that. But I think it's high time now, as evidence is mounting, not just in Canada, but evidence is mounting externally in U.S. and other jurisdictions, that there is a serious problem here, and we need to not bare your head in the sand and say, okay, everything's okay here. No, it's not okay. And it's okay that it's not okay, because that's the reality. Okay, first admit there's a problem. That's the big start towards solving the problem. And hey, so what can we do to solve the problem? That should be the fundamental thing. Is what's the blame game all about? How does it help me to blame IIROC? It doesn't. It doesn't help my company. It doesn't help my investors. It's like, but IIROC actually has the power to actually, with some guidance from the Canadian securities regulators, the OSC, Alberta Stock Exchange, the Quebec Securities Commission, BC Securities Commission, etc., to make constructive changes that actually could help investors, could help companies. And that's what we need to focus on. So it's not so much, because I've always been, my dad always had a good point. He said, hey, when you got a finger going at this saying, hey, you're the problem, well, 3 of them are pointing back at you. That struck with me. The blame game is a useless game, because that doesn't help anybody. Everyone gets defensive. I don't want IIROC to be defensive. I want them to be offensive. I want them to say, hey, you know what? We got a problem here, and we have some tools that maybe need to be changed so that we can actually address the problem to make a more constructive capital market for Canada, and make a better Canada. And that's really what we're trying to do here. Because to the extent that we can have a more constructive capital market, we'll have better companies, we'll have more investment, we'll create more jobs, we'll pay more taxes, our society can function better. That's what it's all about. And we need to sort of not focus so much on the blame game, but on the change game. That's what we need to be focused on.
No, fair enough, Terry. And listen, I think we only have time for one more question. I know there are more questions, so rest assured, everyone, I'll be passing over them to Terry directly so he can follow up with you after the fact. But Ross wants to know, Terry, does Safe Canadian Mining have a form letter or even some sample text that people can use to send complaints to their MPPs?
We don't. Honestly, we as a very lean organization, we've got no paid people that pay Safe Canadian Mining. We pay people for certain things. Obviously, people like 6X and some of the GR people we use. So we're pretty lean on that. But maybe that's something we could do, and constructively that might be helpful. Certainly, we need to sort of show the government that we do have support, and we do that in a number of different ways, but that's a good thought, and maybe that's something we can put together in the future.
Absolutely. Well, Terry, I want to thank you for coming on. Paul, thank you for joining us as well today, but I want to, before we wrap up for the day, just provide you the opportunity for some closing remarks before we sign off.
Well, before I go, I'm going to give my guest, and I want to first thank him, Paul. It's not without some jeopardy that Paul comes on and talks. It shouldn't be, but I talked to several other participants in the marketplace, and everyone's scared. A lot of people are scared to talk about these issues, and I give Macmillan Bench and Paul Davis, because they've been thought leaders in this space, and it's not been an easy space to be a thought leader. So good for you and good for Macmillan Bench to do that. But Paul, over to you for your final thoughts.
Sure. Thank you for that. No, I mean, it is a difficult space, but the one thing we've not been afraid to is write objective, sort of, we call them opinion pieces of some of our partners, particularly my view. And at the end of the day, I act for short sellers, right? I do act for short sellers. We think it's an important part of the market, but we do see issues in terms of systemic risk, and that's why we wrote this paper, and that's why we continue to advocate regulatory changes, because we do think when there's illegal short selling, or what you call predator short selling, it can put the entire system at risk. And so while, again, we think short selling is important for price discovery, it's important for liquidity, and there's nothing wrong with it inherently, we need regulations that protect the market. And certainly our clients won't be impacted by these changes because they're doing the right thing.
Thank you, Paul. Really appreciate you being here, and appreciate your education for us. And I'll say once again, we'll put the link to the Macmillan Bench article in a Save Canadian Mining email, so folks can tap into that. And it's really a well worthwhile your reading if you're an investor in the marketplace, and help you to understand the issues. For Save Canadian Mining, we're going to make a push here for the next 3 months or so. I'm going to get back with my, the partners that were, the mining partners that supported us, and hopefully some new companies that could come on board. So we need to do a small amount of fundraising here to keep the GR forces and the market media forces running, so that we can expose this issue as best we can. Nobody wants to make a career here. We really just want to make a difference and get some changes fundamentally to the market that make it much more difficult to be a predatory short seller. So hopefully with the help of the audience and with the help of thought leaders like Paul Davis, we can do something and make a difference in securities law in this country, and make a more fair and transparent market for companies and their investors. So again, thanks everyone for listening here today, and we'll look forward to engaging with other thought leaders in the space over the coming months as we try and drive this through to some actual legal changes sometime soon. Thanks again, everyone, and have a great day.